Welcome to our ongoing series on the reform of the Kenya Income Tax Act. On this session, we are focusing on personal income taxation, and that's basically the taxation of employees. I'm delighted to have with me Judy Muigai. She's a director in the PwC tax team and specializing in personal taxation. And with her is David Mwiti, also a senior manager in the same team, specializing in personal taxation. Judy, David, thanks a lot for joining us. Maybe I'll just start off with, the question around whether the Kenya Income Tax Act is fit for purpose. We are now in a world of globalization. We're in a world where there is increased mobility of employees. There are different forms of working. Yet I think the Kenyan Income Tax Act was drafted in a much more simpler time and with much less complex working arrangements. Do you think that the Kenyan Income Tax Act accommodates this kind of working arrangements? Is it still fit for purpose?
Yeah, Titus, I totally agree with what you're saying. I think things have definitely evolved, and the tax rules have perhaps not kept up to date. There is room to modernize them. For example, when it comes to short-term business travelers, which is kind of employees working across borders, instead of having kind of large pools of permanent employees, you have a lot of frequent business travelers, short-term business travelers, and our rules are really designed for a more static kind of expatriate coming to stay in Kenya and work for a while. So yes, we do need some incentives around and some clarity around how to tax these guys who are kind of hopping around a little bit more. For example, if someone is working in Kenya for, 10 days, 30 days in a year, what are the tax rules for that population? And should there not be an exemption, a de minimis threshold to say, if you're working in Kenya for less than 40 days in a 12-month period, you should actually be exempt from tax? And what about compliance, which can really exert a lot of costs on an employer? What about introducing a flat, simple kind of withholding tax regime for these people, which is what we've seen in countries like Tanzania, Ghana, Mozambique. So I think there's ways to make it easier and to kind of incentivize the use of these business travelers.
I think there's been, maybe just as a follow-up question, I think there's been this idea that when you look at consultancy and consultancy arrangements or consultants coming to work here in a short-term period, that these consultancy fees are subject to withholding tax. Are you saying that there is more to it than just withholding tax?
Absolutely. So the withholding tax is really the tax at the level of, shall I say, the employer or the client. So really it's corporate entity level tax. But there's also an individual who is rendering services in Kenya, and even if they're non-resident, they're still subject to taxation. So there is an extra layer of tax, and yes, you're right, a lot of people may not be aware of that, but the rules do allow for it, but perhaps we need finer detail around when that tax crystallizes, and again, for people who are kind of frequent business travelers, potentially some exemptions or some thresholds are required so that the burden of compliance for them does not even exceed the cost of the tax itself.
And just for clarification, maybe just let us know the distinction between being in Kenya for business and being in Kenya for work.
Essentially, if you're performing your employment duties in Kenya, you're not just attending a training, a conference, or a meeting, or interviews, or kind of playing a stewardship role, then really what you're doing may be considered to be work. And you'll notice even when you do have something like a business visa, it's very clear employment is not prohibited. But if you're rendering services for a local entity in Kenya, that is work, and you are subject to tax, and actually you need to even have the correct permit to do that.
Yeah, excellent. Yeah. David, maybe I could just switch gears a little bit. And again, the Kenyan Income Tax Act was designed in a time when most of the businesses that were located in Kenya were dealing with Kenyan issues and were dealing with Kenyan business. But we've seen over time, and especially in the past 5 years, there have been a lot of setups of regional headquarters, African headquarters here in Kenya of companies. How has the Kenyan Income Tax Act dealt with that in respect of taxation of employees? Do you feel it's been sufficient? Are there issues there? Are there issues that could be dealt with? Are there incentives that could be provided to encourage more of these kind of HQ type companies to set up?
Yes, the Income Tax Act has not evolved with times, that's true. The provisions that have been there, most of them have not taken into account the scenario of companies now that have set up regional hubs, as you'd call them, or basically regional offices that take care of the region, countries just in the neighborhood and in parts of the upper Eastern Africa. And yes, the Income Tax Act does not currently provide incentives, very limited currently on such individuals who are operating for the regional, which basically means they are either based here partly and also rendering services to the other branches or all parts of the other entity within the region. So the current situation is where the income tax just provides a deduction which is equal to a third of the income of the individual who is operating for a region, subject to meeting certain conditions as an entity as well as an individual. That is not sufficient enough because it also leaves the company with more tax because just a shift of the tax, what's not tax on the individual, is just shifted to the company. So yes, from that angle, there ought to be more incentives to encourage most of these entities setting up in Kenya as a regional office. Besides that, we have now companies in Kenya, like you rightly said, that have now spread into the region. Now, inbound companies in Kenya which have spread into the region. And even those ones as well are caught up in this scenario where the incentives don't cover issues of double taxation or don't remedy that issue of double taxation because they are no, the treaty for East Africa, as an example, is still not ratified. And therefore, these individuals tend to suffer double tax. And therefore, as much as a country, Kenya would want to have to encourage companies setting up as regional hubs or operating from Kenya as a region, then we don't seem to be providing sufficient incentives to be able to attract most of these companies into the hub. So yes, there should be, and one way could be actually to provide more incentives in terms of either more deductions which are not shifted to the company as a tax. The other way is also to provide unilateral tax credits. Currently, it's only restricted to Kenyan nationals. So therefore, most of these multinationals that we're talking about would have to bring in foreign nationals to run some of these operations. So that could be one. The other one could also be just appreciate like it's happening in other jurisdictions, that you could also provide tax credits as well, foreign tax credits to cover the double tax aspects.
Okay, excellent. Maybe to switch gears a little bit, we're seeing now just completely different business models where the people working for these businesses seem to be straddling between being independent contractors and being employees. And I think this model is being referred to as the gig economy. Now, probably not a big part of the current of Kenya's economy, but probably going to be a very pertinent future going forward. Do you think the Kenyan Income Tax Act currently does accommodate the gig economy and that type of employment model? And if not, what kind of changes would we be looking for to accommodate those kind of employment arrangements or those kind of arrangements?
Yeah. As you say, it's something that's picking up, that's becoming more prevalent, what we refer to as the gig economy. And I think our tax rules were really designed more for a formal employment type of situation. But now, thanks to advances in technology and ability to work on online platforms, somebody with a laptop somewhere in their house can probably, do a lot of work for multiple clients or multiple employers at the same time. And I think our tax rules somehow need to be modernized or expanded to cater for those kind of scenarios. The kind of general principles that we have at the moment may not really suit that new model of working. So it may be something that if we are reforming our Income Tax Act now, that should be factored in. because with time, with future generations coming on board who prefer the flexibility of these new ways of working, the rules need to be ready for that. And just to give you an example, if somebody is working, from a laptop out of their kitchen or their bedroom, what expenses are they allowed to claim against that income? And as you rightly referred to that confusion between whether they're an employee or whether they're an independent contractor, because the tax rules are different. One is subject to pay as you earn at 30%, one potentially to withholding tax at 5%. And you really don't want a situation where the rules are not clear enough that the person withholding is not sure what rate to withhold at. So we do need clearer rules that are really designed to make sure that tax doesn't hamper the growth of this gig economy. I think there's scope for a lot to be done. Yeah.
Okay. Moving to another topic is around the income tax brackets, and the income tax brackets we've seen have remained pretty stable throughout for very many years. Is that a good thing? Is that a bad thing? Should there be more differentiation around the income tax brackets?
So income tax brackets ought to be progressive, therefore, which means persons who have more ability to pay the tax or pay higher tax. The Kenyan tax rates have been almost same for over 10 years. Recently, there were just expansions of 10%, almost no impact on the expansion. But more to that is the tax bands are very squeezed, meaning that most of the people earning employment income hit the top tax rate. In other jurisdictions, if you look at these, the bands are much more spread out, such that by the time you hit out the top tax rate, then you're earning quite some high income. So yes, there should be a bit more expanded tax bands to take into account, one, people or persons with higher ability to pay higher tax rates, and cushion the lower income earners, such that the lower band starts at a much higher rate. Currently, the minimum taxable income is almost equal to the minimum wage, meaning that as soon as you earn an income, then you are subject to tax. So we are not cushioning the low income earners.
Okay. And that how do we kind of rate in terms of, and obviously this is a very broad question, but in terms if you compare with other countries and the income tax brackets, are we sort of a bit off the mark, or are we more aligned? Do other countries also have such relatively stable income tax brackets?
So good question, Titus. Most other countries are moving away possibly from the very squeezed tax bands. Very lately, Uganda increased their top tax rate to 40%. South Africa is at 45%. UK is at 45%. And their bands are quite spread out, meaning that the lower income earners are cushioned from tax, and the higher income earners, what people would call high net worth individuals, but these would range from country to country, pay higher tax rates. We are seeing movements even from other countries where now countries are introducing even a tax rate just for the higher net worth individuals. From a Kenyan tax perspective, it may be controversial, but it may be useful to actually consider looking at these high net worth individuals with a clear definition in the Income Tax Act and the guidelines on how these individuals will be subjected to tax.
Okay. And finally, maybe I could just touch on the Big Four agenda. And in the Big Four agenda, some of the pillars there are affordable housing and universal health care. Do we see any role in terms of taxation of employees in helping to contribute towards promoting some of these pillars of the Big Four agenda?
Oh, absolutely. I think tax rules and tax regimes are really a good tool in the hands of government to accomplish its objectives, and the Big Four agenda is no different. So, for example, if you think about affordable housing, in the recent past, they've maybe tried to expand say, the deduction for mortgage interest and things like that. But the challenge with our housing market is, I think, a lot of property is actually quite highly priced. Mortgages are very expensive. So some of those incentives need to be steeper or deeper. So more, there is room for more to be done, to answer your question. And in other ways, sometimes the impact isn't that direct, but it accomplishes the same goal. So for example, if you're talking about food security and essentially a better standard of living, that can also be accomplished, just to reference David's point around, the tax threshold. So if you say you set a tax threshold of, say, 20,000 shillings and say anybody who earns up to that limit won't suffer any tax, you're essentially putting more money in their hands so that they can buy food, so that they can access basic medical services, so that, so it accomplishes the same objectives. And one of the pillars also is around manufacturing and really the incentives for that. And it's possible to do something around individuals. So for example, there is a rebate that was introduced for the hiring of graduates. And we're thinking perhaps that rebate can be extended to diploma holders, technicians who do a lot of work in the manufacturing sector, just to again incentivize higher volumes of recruitment in that arena, create more jobs, have more people earning a living. So really, tax it's a very powerful tool, and yes, I think there's just so much that can be done. Yeah.
And so a very powerful tool in terms of mobilizing revenue for the government, very powerful tool in terms of incentivizing certain areas of growth that especially are under the Big Four agenda, also in terms of regional offices and Africa and headquarter offices. So a very important area of taxation that needs to be looked at quite seriously in the reform of the Income Tax Act. Let me say thank you, Judy and David, for attending this session, and I look forward to welcoming you again when the actual draft bill is out, and we can see which proposals have actually made it to the final draft.
Yeah, thank you very much.
Thank you.